many ways to achieve financial freedom. One of these ways is investing in stocks with a proper dividend rate. The primary goal of investing or buying stocks is to make a good profit. Would it not be funny to buy stocks that would not give? To get the proper stocks to buy, one needs the right information. However, you cannot underestimate the power of outstanding information on companies with the right portfolio. In fact, the more information you have, the more your chances of investing in the right company. So we have put together 5 dividend stocks that are trading at attractive valuations. You will need this information to make the right investment and purchase the right stocks. Stick around, and you are sure to get the best company with the best portfolio and a consistent return on your investment. 5. Pfizer, or PFE. First on our list is the highly lucrative PFE stock. This company is one of the renowned pharmaceutical and biotechnology companies in the world, and you would agree with me that the services provided by this company are one of the most sought after in the world. The company is engaged in producing and distributing medicines and vaccines for immunology, endocrinology, neurology, and oncology. Pfizer has an estimated worth of over $1 billion, and it is one of those companies with a consistent inflow of cash, which means that when you buy their stock, your dividend is consistent and spiraling. It would interest you to know that the stock in this renowned home of medicine and vaccine has experienced a 35% surge over the past 6 months. The company is in the right place to invest in as it offers a $1.6 dividend on each unit of stock you buy. This means that you would get 2.99% of your invested capital. Do you still want to hear more before you take a bold step towards securing your future financially? As with other renowned pharmaceutical companies, Pfizer played a frontline role in the front section of the COVID-19 vaccine and made over $36 billion in 2021 from the production and distribution of the vaccine. 4. Altria, or MO. This is another company that has a very attractive valuation on its stock. Altria is one of the world's largest manufacturers and distributors of tobacco and cigarettes. This American corporation is a lion at what it does, holding a dominant position in its field. This company's stock has trended higher by 22% over the last 12 months. That's not all. The stock trades at a forward price to earnings of 10.88. This means that you don't only have an assured stream of income, the dividend that accrues to your stock is consistent. Altria Corporation is valued at over $10 billion. The cash flow in this combat is enormous. I mean, there is a daily record of millions and billing on profits. A company with this liquidity has even more to pay people who consistently invest their returns. This company has arguably one of the most attractive valuations in the world. Apart from its many businesses and its stance in the tobacco and cigarette niche, Altria has a huge stake in Cronos Group Incorporated. With the imminent legalization of cannabis in the United States, Cronos is most likely to gain growth traction. 3. Lockheed Martin, or LMT. On your number 3 spot is the tech company Lockheed Martin. This company is given to the provision and production of services such as aerospace, arms, defense, information security, amongst others. Lockheed prides itself as one of the largest companies in the aerospace military support, security, and technology industry. It was the world's largest defense contractor in 2014. Although the stock from this company has not been performing within its capacity, its annual dividend of $11.2 is both attractive and sustainable. With the forward profit to earn of 14.15, Lockheed's dividend stock looks poised for an upside breakout. As you would know, one of the companies that are not necessarily affected by the economic shakes is defense companies. According to statistics, global defense spending spiraled even in the pandemic year. And with the expansion of its client range away from the U.S., the growth of this company is eminent. In the third quarter of 2021, the company reportedly ordered a backlog of $134.8 billion. This alone makes it evident that Lockheed is a very liquid company and is capable of providing the said dividend as at when due. Also, the company has controlled an operating cash flow of $8.3 billion for the last year, and for 2022, Lockheed Martin has provided an operational cash flow of $8.4 billion. Therefore, it is clear that cash flow in this company would remain stable, thereby sustaining the dividends on stock. The company is also on the international front, delivering F-35 jets to the U.S. as well as 14 other international allies. Lockheed Martin is most definitely going to have a prominent stance in the world's market, which means that its stock would remain attractive and highly valued. Number 2. British American Tobacco, or BTI. The next on our list is British American Tobacco. As the name implies, this company is one of the world's largest producers and distributors of tobacco and cigarettes. The stock of this lucrative company was trading at around $34 level in November 2021. Since that time, it has been on the increase, with the current trade at nearly $43. Looking from the valuation angle, the 9.6 profit to earn level seems very resounding. What investors should expect is a further rally for BTI stock, and they will also benefit from BTI's dividend yield of 6.9%. British American Tobacco experienced a 50% growth from bow category products in the first half of 2021. The company also claims to have 16.1 million non-combustible customers. This is a big deal on the side of profit for these non-combustible goods, like views. The company also had a $3.1 billion operating cash flow for the first half of 2021. Also, there is an annual cash flow of potential $6.1 billion. This means that the company has a very robust and highly flexible dividend system. British American Tobacco is a company that investors who seek a company with a potential gold and a strong portfolio should invest in. The company's financial structure would cause an increase in the dividend of stocks and increase investors' confidence in the integrity of their trade system. 1. Intel, or INTC. Intel is one of the world's leading tech companies. It is the world's largest manufacturer of semiconductor chips. Intel is also the developer of the x86 series of microprocessors, the processor found in most personal computers. INTC stock is another quality name among the dividend stocks that trade at an attractive valuation. With the forward price to earning of 10.14 and a dividend yield of 2.59%, the stocks in this company are worth considering. We cannot overlook the fact that Intel has not been at its best in terms of investment and innovation. Recently, however, things are beginning to look up for the company, and this change will have a positive impact on INTC's stock. This year, Intel is poised to invest between $25 and $28 billion. This is not going to be all, as the company is guided for higher investment MS in the next few years. Buying the INTC stocks would assure you a mouth-watering dividend at the required and specified duration. The growth of this company would result in the growth of the dividend that accrues to stock. More profit equals consistent rise in the return on your investment. That's all we have in today's video. Do let us know what you think about the stocks listed above, their portfolios, and if they are truly a haven for investors in the comment section below. Do like this video and subscribe to this channel for more amazing content.